pullback, held the 17 twice, perfect pullback and a bounce. Got a trend line break and oozed higher. Kind of flattened out here in the afternoon. This is the noon to 2 window, which, as you guys, I don't have to tell you, is a little more dull in the market. But nevertheless, got another shot here when it held the 43 later in the day and another boost towards the end of the day.
Yeah, you'll notice on most of these charts that the entry doesn't really present itself till, a lot of times an hour into the session, quite honestly.
Yeah, it
Over
could
the
be
years,
anywhere from, well, and I'll throw this out there. The first trading hour of the day, I do this on a 2 minute chart. 17 and the 43 are just as effective on a 2 minute chart. But after the market's been open for an hour, um, I find 5 minute charts are more reliable for what's going to happen for the remainder of the trading day.
I got to tell you, over the years, I've had so many people, Doug, that have asked me what's the best time to buy a stock. It's kind of strange because we do all sorts of intraday trading and short-term stuff, as well as swing trading and longer-term stuff. But it seems like day traders want to. They feel as though they have to jump in a stock while you're still hearing the opening bell ring, which I think is a huge mistake. I prefer to let the charts set themselves up and let the market kind of tip its hand. We get an opening range, and so I'm much more comfortable waiting 30 minutes, 45 minutes, an hour into the session, seeing how everything's behaving, and then we isolate, one or two charts, a handful of charts that have just the right setup, and you'll notice on many of these charts that the setup didn't actually manifest until the market had been open for a while.
Well, and the other thing that I want to say, which is just a mind blower, I mean, when this happens, dude, it just blows our minds. I mean, literally blows our minds. You can have a regular down day. Like, it could be a pretty big down day, down 15, 20 points in the S&P, right? And the grid, the stock picks, is not filling up with inverse ETFs, right? But the other day when the market was down 40 points, the grid of stocks that were moving up from the open was a who's who of leveraged inverse ETFs. I mean, right from the get go. I mean, it was just it never fails to amaze us that some days the grid will fill up with those inverse ETFs when the market is just getting hammered. But the market can be having a pretty big down day, but it doesn't necessarily do that. Isn't that
Yeah.
odd?
Well, today was an odd day too. The market gapped up and then really didn't go anywhere. Spent the whole day bumping up against resistance, and so at the end of the day, they like to say, "Oh, it was a triple digit up day or whatever." But I'm telling you, I've seen better days where stocks have moved up when the S&P was down 18 points. And so to us, it's really about directional move off of today's open. Speaking of which, we have like a histogram of leveraged ETFs in our research lab on the market dashboard. Every day, half of them go up and half of them go down. And what we're doing is we're measuring the directional move off of today's open, not yesterday's close. Right? So, on any given day, FAS and FAZ are going to move opposite to each other. And what we're doing is we're monitoring them based on where they open today. So it's kind of interesting. Kind of
This
taking
is an
each day
this
as
is
it
an
comes.
interesting chart because with this one, this thing put on a really big gap down. But you'll see the 17 was still above the 43, right? And when we get big gap downs like this in the morning, a lot of times, Bill, I'll mark the intraday reversal right out of the opening gate, right? Because you can a lot of times you can catch it because it's going to revert to the mean. This would have been a great one for that. So you
Sure.
could have potentially gotten your first entry of the day down there just above the first 5 minute candle, and then when it came back up here, settled on the 17 and built yourself this little nice triangle pattern. You had a breakout and a throwback, and then it was kind of off to the races, and then looks like you'd have been stopped out here later on in the afternoon.
Yeah, that's a good example of a stock that actually gaps down and then basically takes off from the open.
Right, because here's the thing: all day until literally like 10:30, every data source on the internet was going to display this stock as down. It was going to be down, 8%, 6%, 5%, 4%, 3%, 2%. Oh, look, it's positive today, right? They're going to catch up with you right here at 10:30 in the morning. Whereas if you're watching, you've known from the open this thing was moving higher, and so that's that's one of the reasons why the open is so critical.
Absolutely. When I look at these charts, I'm like, wow, look at the moves these stocks are making, and then I'm reminded of the fact that on a day-to-day basis, I mean, that's part of what we built the scanner to do, was to isolate the largest, what turned out to be the largest percent gainers from the open on a day-to-day basis, and it does a real good job of that. Now, it doesn't catch every single stock, obviously, every single day that turns out to be, the biggest gainers, but pretty much on a day-to-day basis, it does, and it isolates them fairly early in the morning, generally within the first 15 minutes. A
Well,
lot of
and
this on
the
a
other
day
thing
on a
that's important to know is, look, nobody's getting the exact low, nobody's getting the exact high, but if the stock's going up 16% today and you can get six of it out of the creamy middle there somewhere, that's good enough for me, right?
exact.
I mean, you don't have to, uh, every time you step up to bat doesn't have to be a home run. You can win the game just by hitting singles. Here's one that had multiple chances for an entry with, clear respect for the 17 and the 43 moving averages and, just another, fairly decent gainer. I mean, if what you're looking for is a intraday position trade, this is a really good way to get your setups.
Absolutely.
In fact, what I like about this chart in particular is it set the 10 o'clock high here. It had its little fade down here to the 43, yesterday's close, the little last chance thing. When it broke that trend line, it got a nice move. That was a fairly decent trade between the trend line and the 10 o'clock high, right?
Sure.
And so just blasted right through that. I mean, some of these, you know, in fact, we have several members of the service who they like to be in and out, you know, done by noon, right? Because the noon to two window is too slow. And then I know other people who like to trade the afternoon session, right? Bill's always a big proponent of getting a trade in the afternoon session. Um, but here's the thing: if you would have traded this up with a stop, I mean, you could have been out here and gone. It's noon, you're done. You make your little move, and then you don't have to worry about it the rest of the day. That's kind of had a guy write in and send us an email that said that's the thing that he loves the most about our service is that he's going fishing with his kids in the afternoon, and he's done. He's in, he's out. His trades are closed. It was either a good morning or it wasn't, but he's done at noon. So this one had a gap that it came all the way down and filled, which was kind of interesting. I know, Bill, you like to talk about gaps and fills because you can kind of count on gaps getting filled, right?
Yeah, well, a lot of times they will. In this particular case, I mean, there's nothing unusual about this chart. What I wanted to point out, and I guess this is as good an example as the previous one, is that just because the stock is below the 1743 doesn't necessarily mean that there's not a trade that's going to develop out of this. But the key on this particular one was that, it actually gapped up, fell down, and filled the gap. And when it started coming back up, this is one it's kind of suspect, put it that way. This is one where we would have likely stayed away from this until we saw it break that 10 o'clock high. Even on the 10 o'clock high, you would expect some resistance maybe. Perhaps it failed at that level, but the key there was that you got one extra bar that broke above it, and then when you got the 1743 cross to the upside, that was a pretty good confirmation right there. So on
That
something
was.
like this, I mean, each pattern's got its own kind of little trickiness to it, and they don't always follow through. But typically, when Doug's marking up a setup when we're doing our live shows, which we do Monday, Wednesday, and Fridays at the market open, I mean, typically the stops are nickels and dimes, and the entries that we get, if we get follow through on them, then are multiples of what we're risking. I guess is what I'm
Absolutely.
trying to say.
The other thing I wanted to point out on this chart is that this thing, sort of gapped up and faded, right? Look, it had 5, 10, 15, 20 minutes there that it traded under the 17 trying to get through. Then it finally got through, and it spent the next 15 minutes holding above, right? I mean, that was a pretty good sign. That would have been very encouraging, but you're right. We would have waited for the 10 o'clock high to break on this one. And, but,
And at the end of the day, you can see why it's imperative that you trail a stop up and or set a say, well, the 43, trail it up with the exponential 43, and that'll help get you out.
Right. And so you didn't catch the top, you didn't catch the bottom, but you still made a good trade right out of the creamy middle. Um, all right, here, Bill, you've got this one all marked up. I'll let you talk about what you got here.
Yeah, well, part of, if you see where it says strategy there, and I touched on this earlier, part of the strategy that we talk about when we're actually marking these things up live is we'll find a good kind of, trend line break, 1743, break above a previous candle high, like a really good setup prior to taking out the 10 o'clock high. And so a lot of times I will suggest that maybe you take a partial position at that point, and then you add to the position on the 10 o'clock high breakout. So that's kind of what I have marked up here. You take a half position in that little green area there where we got the trend line break, 1743 crossing that, and then when you broke through the excuse me, the high of the day. It's not necessarily, it's the high of the day after the first 30 minutes, which we have marked there. You take the second half of your position there, you add on to it, and then you let it roll. And then so you see a couple of spots up towards the middle there where it would have been a good idea to trail your stop, get taken out. You see what is there, like four candles there where you hadn't made a low. So as soon as you broke through the low of that candle from 15 minutes ago, it's not a bad place to put a stop. I suppose that if you didn't trail a stop up there, you could have put one down at the 17. You'd have still had a decent gain. You'd have just given up some of your profits. But you'll notice, I'm sorry, the 43. But you'll notice that it never actually, like that candle never closed below the 43, and it got a second wind in the afternoon. So this is kind of a choppy chart here, but you can see there was opportunities. You couldn't have lost money on this. Put it that way.
Right. It's a very well. Here's the other thing too. When you start getting these runaway long candles like that, that's a good sign that you can sort of abandon your 1743 and move your stop right
Exactly.
into the
Good point.
daylight above. Because when you start getting those long range candles, it's just it's kind of unsustainable. I mean, what it's going to do that for the rest of the day? If it does,
Well, when
great.
you get a
Keep trailing.
parabolic, yeah, when you
you
get a
know.
parabolic move like that, the best thing you can do is really kind of raise your stop up as much as possible because you know that's coming to an end.
Right. So, like, I equated finding the good setup. Look how patient you had to be here. This really, the entry didn't come till just after 11 a.m. Right. So the market had been open for an hour and a half. This is a lot like sitting around fishing. You finally caught the fish here, right? But then the rest of the day is how did you land the fish, right? Did you
Good
scale out of
analogy.
your trade? Did you trail your stop up with the 5 period moving average, or two candles previous, or some other crazy rule that you made up? How you get out of the trade is either a matter of whether the market takes you out or if you decide that's enough. All right, let's land it. Right.
Which we do a lot of times on our swing trades. I mean, honestly, our swing trades typically have targets. 3, 6, 9%. We suggest scaling out, and when they hit certain targets, we call them winners and close the books on them.
This is a good example. This stock gapped up a little bit, faded right away, and then it started struggling with the 17 and the 43. That was a pretty good sign that this stock wasn't coming back this morning. They were doing some shenanigans here at the open, and it was not getting back above the moving averages. You got several good shorting opportunities here, and it's the same thing. It's just the upside down version, right?
Sure. And you'll notice that even though there were, certain candles that poked above the moving averages, they never actually really crossed, and you never saw daylight between the moving averages. And we see this all the time on a stock that's kind of, having a weak day, and it'll rally up right to the 1743 area. They'll kind of pinch together, and that's where it gets rejected. And then obviously you could short it just under a prior low of
And
interesting
obviously you cover right above, and so
above the
it's
previous high. Yeah.
right, and so it's the same thing. It's just in reverse. Here's
Indeed.
a picture of what the grid looks like on a typical day. I don't know when you got this screenshot, Bill, but this is
No, it's
you
from
can
just the other day, actually.
filter this list by you know which scanners you want to run, stocks in particular price ranges, stocks over 1 million shares. I mean, there's any number of filters that you can apply to the list. $20, whatever you like, really, in several combinations. You want to talk about filtering grid?
Yeah, well, like you said, you can use price, volume, that type of thing. Typically, I run my grid wide open, right? Because you know me, I can watch 100 stocks simultaneously. So I tend to focus from the top down, usually paying attention to like the top 10, top dozen stocks or whatever. But really, the thing to note on here, I mean, there's a lot to look at on this. I'll be happy to answer any questions if anybody has any on the grid, but basically the thing to look at is there's a pick price, there's the current price, which says last, and then there's the percent change. And so the percent change is the difference between the pick price and the current price. This thing updates automatically. You just open it in a browser, leave it open all day. It refreshes every 2 minutes, and that pick price may be below yesterday's close. It may be, at the gap. Um, if a stock closed yesterday at 20 and it opens today at 22, our pick price will likely be 22.10, right? Because like I said earlier, we're compensating for the gap. We're not basing that pick price is not based on yesterday's close. It's based on today's open. Where was that stock trading 2 minutes, 3 minutes, 4 minutes after today's open? That's when our database will set the pick price, and then we're watching for stocks that are making significant moves up from that pick price. And so that's where the comparison comes from. So if a stock gaps up, from 20 to 22 and spends the whole day dropping, you'll never see it. It will not make an appearance on the grid because in order to show up, it has to be higher than the pick price. And then, basically we watch them sort themselves to the top. A stock or an ETF is up 1.5, 2%, 2.5% on its way to being up 5, 6, 8%.
Right.
Right? And so
Well, this is a shot of the other day when the S&P was down 40 points, and I'll read them to you because it does. I don't know if it comes through that well.
yeah, it's pretty good.
UVXY, TVIX, VIXY, DUST, EDZ, SQQQ, SPXS, ZSL, FAZ, DTO, GLL, TWM. I mean, it's a who's who of inverse ETFs and the occasional stock, which happened to be up that day. But
Yeah,
it
it
was
takes
bizarre.
takes a pretty big down day for it to look like that. I mean, quite honestly, I remember, and this was just the other day. I told Doug, I was like, I haven't seen that many inverse ETFs on this thing all year.
I
Right?
know. Well, that's what I'm saying. It floors me because when the thing starts loading up with inverse ETFs, I'm like, oh God, look out.
You know how I hate those VIX ones too. I mean,
Yeah.
I personally, we do our Wednesday night shows, we do our morning shows. I typically tell people to stay away from those VIX things, but that's another story.
Um, I don't want to make a sales pitch here, folks, but um, if anybody wants to try it out, we got a 10-day free trial. We're going to let you try out, and anybody that wants to sign up, we'll give you a whole year for $597, which is typically um, $200 a month, $199 a month, and so it's like 75% off. But here's what's in there. If you want to take it for a spin, there's 5 lists of real-time stock picks each day. The members blog where Bill puts new swing trade setups on each week. The real-time ETF dashboard, which we didn't even touch on for a second. Pivot highs and pivot low scans for swing traders. Set it, forget it trade plans, which have specific targets laid out in advance. Strategy room videos, live broadcast 3 days a week, midweek market watch show, the week ahead, and the market timing model, and more. Um, but if you want to get a 10-day free trial, just go to that URL right there, and you can get one. And we'll be happy to answer any questions, Dave. Sorry we ran long.
No, you're okay here. We got enough time here. We got still like 15 minutes to go here if we need it. So if you guys have any questions, feel free to type those questions in, and we'll spend some time answering some questions with Doug Newberry and Bill McKinley. Hey, so on your intraday trading, are you? Are, it didn't seem like you were really setting targets here. That you were kind of trailing out. Are you setting targets at all? Or are you always looking to run it to the end of the day, or until you get stopped out?
Typically, I think on an intraday trade, your best bet is to trail the stop up. Now, that doesn't mean that it's not a good idea to take some off. We these spots where if we catch, like Doug says, if we catch a fish at a certain point there, I will suggest perhaps pulling half of it off and then trailing the stop on the rest. So I'm kind of a big proponent of letting a stock run as far as you can, trailing that stop up, and because there's nothing worse than just pulling the trigger, dumping the whole position, and having the stock make one of those extraordinary runs like they do occasionally.
All right. So you were a lot of your examples was a opening range breakout, or at least breakout using the 10 o'clock time, essentially a 30-minute opening breakout.
One of
Is
the
there some
things,
reason I wanted to ask you about that? Is the long held strategy or strategy that someone might find if he's new to trading, looking at opening range breakouts? It might be a 15-minute opening range breakout, taking out the higher low of the first 15 minutes. How did you settle on 30 minutes there?
it's interesting that you bring that up because there's a lot of times where the 15-minute will work, and it's still very valid. We have just kind of found over the years of doing this that the first 30 minutes, I've seen the market reverse a lot of times at the 10 o'clock mark, and one of the reasons for that, Dave, is that a lot of times you have some sort of economic news that's going to break at 10 o'clock, right? Rick Santelli's about to come on and start screaming at you, and that's going to move the market. And so if you're making a trade based on the 15-minute mark, then it's very likely on a day where there's some sort of a news release at 10 o'clock that the market's going to make a dramatic move. And so that's part of the reason that we always like to let the range establish itself for 30 minutes, since we're using 5-minute candles typically. That would be one of the reasons.
And then, how many stocks are you typically looking at? You're doing seems like a lot of scans here, and then how many you're running your scan typically 2 minutes into the session, setting up trades the first 30 minutes. And how many stocks might you end up with that you're seriously looking at, and how many do you actually take positions in?
Um, well, usually Doug, when we're doing our live shows, anyways, Doug will maybe have 10 to 20 stocks kind of on the focus list, and then quite honestly, we narrow that down to two or three that look really good, three or four, and we go through the charts and we kind of focus on those. A lot of what's in our research lab, we haven't even scratched the surface. I mean, we brought like our 1 5-minute strategy here. We haven't talked about how we do our swing trades or our market timing or any of the other things in there. We figured that this would be kind of a cool little intraday type of thing. But to get back to your question, we're typically focused on three or four stocks that have proper setups, and we allow ourselves enough time to let them set up just right. And so we don't really run the scans; they run by themselves automatically. The grid, it clears itself out, starts running every morning, and then automatically refreshes and populates with stocks, and we let the stocks kind of shake to the top. Here's the interesting thing, though, Dave, is that a lot of the stock picks, what'll happen is they'll surge at the open, and then they'll go into these pullbacks here, right? And so they may actually disappear from the grid for a brief period of time as they drop below the actual pick price. And so what Doug is doing is he's adding them to a watch list so that we can watch these patterns kind of develop in them. And then we typically go through and we look for just two or three, sometimes one or two. There's days where we really don't find any good setups. So we're by no means making a whole bunch of intraday trades every day. We're honestly looking for just a couple that set up just right, and we're looking. Basically, everything in the research lab is kind of geared around significant gains. We're looking for the biggest gainers of the day every day as early as possible, which is a pretty tall order.
That is a tall order.
Again, I want to remind everyone that we do record these presentations this week. We'll send out the recordings at the end of the week or over the weekend, the next weekend here. So don't worry about anything if you missed something. And remember, you can go investingsystems.com, and you can check out a free membership, investingsystems.com/free, right there for you. So we got more questions though, and let me find some questions in the list here. If you have more questions, feel free to type those in. We still have at least certainly
View of some of the other things in the research lab. If you go to investingsystems.net, we have a different website there, and which actually has a little video kind of overview of our research lab. So thought I would throw that out there.
I see questions about forex
Sure,
and
and
e-minis and stuff like that, and we don't do e-minis. We don't typically do forex, although we have been watching for, as Dave would say, S and Gs, the U.S. Dollar yen pair, just because it's been so dramatic this year. But we haven't actually issued any trades. Don't ever recommend trades in. Not that I'm against it. It's just not what we do.
no, we
E-mini or forex.
specialize. We specialize in individual stocks. Now we have quite a few options traders in our membership, and they have their own strategies. They have option strategies. What they're looking for from us is stocks that are set up for swing trades, stocks that we think are going to make significant moves over time, that type of thing. And so we do not do options recommendations. However, we are able to identify particular stocks that we think are going to make moves over time. And I wanted to point one other thing out because we did all this intraday 5-minute stuff here. I write a blog every week in the research lab, and we have a lot of members that they're just there for my weekly blog. These guys may work a day job. They're looking for some swing trade ideas, some longer term stuff. I've got a couple of open trades now in our service that have been open 6-8 weeks. These are based on weekly charts. These are longer term plays. One's a dividend stock and that. So, we kind of, like I alluded to at the beginning of this webinar, is that we really cover the spectrum. A guy's looking for just some really good chart markups, some swing trade ideas, that type of thing. We have that in there. It's on the weekly blog along with market analysis. And so we kind of, and the long-term timing system too. I've got guys that are kind of with us, and they're more interested in like our long-term stuff, which we do with ETFs. So we kind of cover the whole spectrum there. It's a little something for everyone.
And then can people scan use the software on their own and scan their own lists at 2 minutes into the session?
It's pre-programmed. Basically, what they can do is, it's pre-programmed to pick a lot of stocks, and there's a lot of indicators in there we didn't touch on. It shows you whether it's like the high of the day tick, what the average volume is. We have an indicator that shows whether today's volume is over the average volume, all that type of stuff. But basically, the scanners is automated, and what the user can do is they can say, okay, only show me stocks, under 20. Only show me stocks that trade 1,000,000 shares a day. Price ranges, volume ranges, that type of thing. But they don't have to fool around with like setting up their own scans. It's a pre-configured scanner that actually draws from 5 different scans that we've developed. Like we have 5 different sets of logic, and it aggregates them onto the grid. If you wanted to see the stocks based on the individual scans, we have those as well. We have a name for them, like one's a momentum list, one's an alpha list, one's the low price list. And so they're actually split up in a different section. We have 3 different ways that you can view our stock picks, but the grid is usually the easiest one because it just runs automatically, it updates every 2 minutes, and the cream of the crop, so to speak, sorts itself at the top.
So how do people get your signals? You're only running a room
Basically,
3 days a week?
Well, here's the thing. The research lab is kind of a set of tools for do-it-yourself guys. We do our trading room on Monday, Wednesday, and Friday from about 10 minutes before the market opens until about noon. And basically our idea is that on 3 days a week we're showing people our strategies, what the markups we like look like, ideas, and with the idea that they will learn to do that themselves. And so the 2 days assuming that our members are, doing the same thing that we do each day. If that's what they're doing, like I said, a part of our service is day trading. I would say that the middle part is swing trading. We're probably more geared towards swing trading than anything. And then of course we have our longer term ideas, our investing ideas, our timing systems. It's
Right, like
really up to the individual.
when we do the show on Mondays, Wednesdays, and Fridays, we'll look at swing trade setups. We'll have people come to us with position trades. Everybody can enter their comments and stuff and participate. Um, and so we'll look at any chart setups people want to look at. We'll talk about all kind of different strategies. We get Dave Landry to come on the show, from time to time, or other traders, and we'll just sit and talk markets and whatnot. It's kind of like the show is a service, but at the same time we'll be marking up the stocks from that day's picks and finding good entries, when they show up.